Hey guys, so coming on here to show you guys a full walkthrough of my full stock options trading plan from start to finish. What I use, my rules, my checklist, my technicals. Going to be showing you guys some examples on TradingView and on my Webull charts and just taking you through the whole process. So as far as my rules, I have 6 rules. 3 trades a day max. I don't want to be in 20 different trades a day, just making my mind go crazy and just being stressed throughout 8 hours of trying to be fully focused. 3 trades a day max, keeping it nice and easy, simple, sweet, and just keeping it real relaxed. 3 trades a day is all you really need. You only really need 1 win a day. And so that's rule number 1. Rule number 2 is I risk max 10 to 15% of my account size per play, right? And so if I'm in 1 play at a time, 3 trades a day max, and let's just say I have 10% of my account in. And for example, let's just say you have a $100 account. The max you're going to lose, or the max you're going to risk, is $10. And from there, your stop loss is going to hit anywhere between 10 to 50%. So the max you can lose on your account is really 5% of your account per play. And then on the next play, you can take a 100% win, make it all back plus more. And so that's where risk management is a big thing. Don't be full poured in an account. Anything can happen. Electricity could shut off and your just account will go to zero. Like, just anything can happen that can go wrong. So risking max 10 to 15%. Some people even only do 5% max risk, and so that's perfectly fine too. But 10 to 15% is my max risk. But usually plays are 5 to 10% of the account per play. And so rule number 3 is I trail my stop loss under support levels, which I'm going to show you on my Webull option chart. But basically, whenever we create a new support on the option chart, I raise my stop loss. I leapfrog my stop losses. I have stop losses in sets of 5. But basically, new support, raise my stop loss. So we're guaranteeing our gains. New support, raising stop loss. So we have a solid level of where we can't lose more than where our stop loss is, and we have unlimited potential. Whereas if you're just selling it wherever you sell it at limit or at market, you're risking the potential gains that you can have. So let's just say if you sold it at 30% and you could be happy with that, or you can put a stop loss, let's just say at like 23%, and if it keeps going up, then it keeps going up, and now you just made 200-300% just because you stayed in the play longer, which is a lot better than just selling at 30% and you're limiting your upside. Whereas you can put a stop loss at 23%, you limit the downside, it's a guaranteed win, take home win no matter what, so that's a good thing, and you still have unlimited potential to the upside. And so we're going to show you a play that we took that was a perfect example of this. And so rule number 4 is once 30% in the positive, put all my stop losses in the positive. There's no reason to take a loss if I'm already up 30%. Whether it's between 5, 10, 15% in the positive, all my stop losses will be in the positive because I will not be losing on a play that I was at least 30% right on the option contract. And so that's just guaranteeing a win. Small wins add up, they compound accounts, and with compounding accounts, you turn it into a big account, and then you can start playing the big plays. So rule number 5, once 70% in the positive on the play, I set half my position to 30 to 50% stop no matter what. So even if there isn't a support anywhere between 30 to 50% and we just shoot up, I'm going to put like 50% of the contracts that I have in the play at least to 30 to 50% in the positive. So even if it just skyrockets and then dumps right after, I'm out at half the play, or half of my position, plus my other half is going to be in the positive. So no matter what, I'm taking wins regardless, but half of the position will be taking a 30 to 50% win, which is a decent win, very solid win. And rule number 6 is once comfortably over 100% in the positive, I set half my position to about 80% stop. So now we're even raising it. Basically, we're almost playing with just practically house money. But once we're up over 100%, we have a little support right around there, and then we skyrocket. I'm going to set half my position to about 80%, and then still with the other half the position chasing under the stop loss on the option contract chart on Webull. And so for my checklist, as far as looking at puts, I'm looking for an overbought RSI, MACD to turn light green, and breaking the previous candle low. So basically just a breaker candle, just showing that we broke the support of the previous candle of whatever time frame chart that we're looking at. And once we hit all three check boxes, then I have my play. I can write it in if I print this out, which I used to, but now I just kind of have it in my memory. But if you're just starting out, by all means, print this out, write the play in, check mark, check mark, check mark. If it doesn't hit the 3 check marks, don't get in the play. But if it hits 3 check marks, boom, 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 we're looking good, all green lights, get in the play, immediately put stop loss under wherever a support is, close to where the entry is, and then from there, we just follow the rules. Once 30%, boom, now guaranteed win. Once 70%, boom, guaranteed bigger win. Once over 100% win, boom, even guaranteed bigger win with stops all along the supports. And so that's the checklist to get into the plays. I'll be explaining that later on when we look at the TradingView chart. As far as the technicals, so RSI, my length is 6 and my source is the MACD histogram. I like for my RSI to work with the MACD instead of RSI being totally separate, just working based off the strength of the chart. I like to show the RSI working with the strength of the MACD, which is basically like momentum. And so when the strength of the momentum is showing me how strong it is or how weak it is, then I can look for a reversal based off them two working together. Whereas if they're just working separately, yeah, they're great indicators, but working together, they're immaculate, right? And so for my MACD, the settings are the standard ones that come with the TradingView chart. The fast is 12, the slow line is 26, my source is close, and my signal is 9. So it's basically MACD is working off the chart and RSI is working off of MACD for me. As far as chart patterns, we have rising wedges, falling wedges. So this is bearish, this is bullish. Those are what I love to use. If I can identify that, that's another added confirmation onto my trading plan. I use double tops and double bottoms, so very bearish, very bullish. As far as triple tops and triple bottoms, pretty much the same thing, just a little added confirmation, another touch. But really love these chart patterns. These are my main chart patterns that I look for when trading. And supply and demand zones, supply and demand tied with MACD and RSI is the key. So whenever you can get the most confirmations, whether it's RSI, the MACD, the breaker candle, chart patterns, supply and demand zones, and you get them all working together, that's where you have the beauty plays, right? Where you go in heavy. That's when you put in the 10 to the 15 because it's showing you the most amount of confirmations. And then I also have Fibonacci retracements. So I look for bounces or rejections in the golden zone, which is between the 0.5 and the 0.618 levels. And so now, as far as going to the chart, so here we have, let me move this over here. We have TQQQ. This was a chart from a play that we played back in May 26th. And so here we are looking at the 15-minute chart. This is in pre-market. Okay, so in pre-market, I'm already getting used or getting accustomed to where the RSI and the MACD are, so I can see that right when market opens, we usually get very volatile moves in the first hour of the market. I can already be suspecting what I'm going to get into. And so number one, the first thing that was on the checklist was the RSI, right? Is it overbought or is it undersold? So right here, we're oversold. So RSI is under 30. This dotted line is the 30 line. Whenever it gets underneath, RSI is oversold. It's looking for a bounce back, right? It doesn't mean it's going to be immediately, but we're looking now bullish, right? So now I have my calls loaded up. Second confirmation on this is the MACD flipping from dark red to light red, and it actually flipped so aggressively that it went straight to dark green, right? So momentum was coming down, flipped hard back to the upside, which is right here. We have dark red, oversold, so looking for a relief bounce. Boom, we got dark green. We have a little bit coming back up on the RSI, and then the third confirmation, which puts me into this play, this is where I set my entry line, is candle breaking previous candle high, right? So once it breaks the resistance that we had in the previous candle, boom, we enter, which was 28.06. And so entry took place on the first 15-minute candle of the day. Calls were entered once we hit all three checklist boxes that I put in the trading plan. And from entry, calls just went crazy, went for 600%. I think this was a 0 DTE or a 1 DTE. and 600% gains is a 7x ROI. So let's just say if you put in something small like $100 and you had a 600% win, that $100 just turned into $700 with a $600 profit. So this was a very beautiful play. And now for the Webull chart for that exact play, we took TQQQ $31 calls that expired May 27th. So this wasn't even a 0 DT, it was a 1 DT and still went crazy. 0 DTs go even crazier, which is pretty crazy that it went 600% just playing on a 1 DT. And so when we broke entry was at $10 per contract, right? So here we have a green line, $10, right? Kind of shot up pretty crazy. So once we crossed that 30% in the positive, we set stop losses to 0.11, giving us a worst case scenario of making 10%, which is a beauty, right? If your worst case scenario is you're making money, it's beautiful. And we just kept shooting up crazy. So this is kind of that explosion that I was talking about. Once we crossed 70%, then we moved at least half of our stop losses up to $14 per contract, giving us a higher guaranteed take-home profit, right? So crossed at 70%, moved half of my stop losses up to 40% gains. So right in between that 30 to 50% that we talked about. And now worst case scenario is half of my stop losses give me 40%, the other half give me 10%, so probably an average just under 30%. And that's a great win. That's worst case scenario at this point, which is beautiful. Then we came up, kind of consolidated, and then shot up. The moment that we broke that resistance that we were having right here, probably right around $22 per contract, I immediately put we raised half of the stops to $20, right? So now at this point, if half of my position is at $20 per contract, the worst case scenario is I get out with my original investment, and whatever I have left in there is I'm playing with house money. So even if I lose whatever I have left in there, I cannot take a loss, right? But of course, the other half of our stops are right here under the support right here. So guaranteed, gonna have a good win, 50 to 60% guaranteed at this point, with having multiple different stop losses. And that was just because we went over the 100%. So can be greedy, raising stop losses, and the other stop losses must have been right here under that support when I was in the play. And so we kind of consolidated, shot up a little bit, boom. Once we came down hard, our stop losses never got hit that were at 100%. Then we shot up and we rebroke this resistance that we had. So the moment that we rebroke this resistance, I'm now raising my bottom stops up under this current little level of support. And then once we kind of came back down, we found a little bit of a support. We have a little bit of a double bottom here on this option chart, which kind of the chart patterns work on the option charts as well. And then we came back up. I'm now raising my stop losses here to this line because I see that we have a support from this double bottom. And so when I raise the stop to just under support levels, ROI is now 180%, with the stops being at $28 per contract. So 180% right there. If you put in $100, right, that's a 2.8x. So that $100 just turned into $280. And so now we have limited downside with stops being under supports with still unlimited upside, right? And so this is where it gets fun. When we broke this resistance that we had here, right about that 40 level, came back up, I'm still raising stop losses throughout under the support levels. And then as we come down, boom, we have a little consolidation right here, which is perfect. That's a hard support right there. Back against the wall, not breaking through. The moment that we broke this resistance again, right around 56, and we shot up, I'm now being very aggressive, raising a lot of my stop losses up to these support levels, right? So stop loss under here, and my big stop loss is going to be right here. ROI is at 360%. Contracts are at $46 per contract, right? So $10 to $46 per contract, that's a 4.6x. You put in $100, now you're at $460. So that's really good. And then, of course, as we rebroke this resistance, I'm going to be chasing with maybe one or two of the 5 stops, just securing gains at this point. The play is so overextended. I'm waiting for a little bit of a pullback, and I'm just happy with my gains at this point, knowing that I'm going to be out of the play soon. But my worst case scenario, my worst stops were now at this point 360%, which is just an amazing play, an amazing position to be in. And at this point, had some stops probably right around 400, 450, got stopped out on the way down, boom. Once we hit this line, I was out of the play. That was it, taking my win for the day. So another example here is going to be involving more of the technicals. So move this back over here. So here we have trend lines. So I love to play trend lines, right? Things really respect trend lines. So we have a resistance trend line created from this local peak. So from this top to there, we have a trend, right? One dot is a point, 2 dots is a line, and 3 touches is a trend, right? So we had 1 touch, 2 touch, 3 touch. It's a trend, right? Looking to come down because we're respecting that trend. It's almost also a double top, not so much, but more so respecting the trend line. But right here, we were overextended from the resistance set from the downtrend line. So the fact that we jumped up above and we gapped up overnight was looking beautiful, right? And so I had my put entry right under pre-market low support. So I already knew it was going to come down. It was so overextended. I put my entry right at the low of pre-market. The moment that it broke that was our entry. And so going through our checklist, we have RSI is overbought at the time of the play. Over the dotted line is over 70. Right here, it looks like we're about 90, right? So checklist number 1, RSI is overbought. Here's my checklist right here. Little confirmations. And so checklist number 2 is MACD showing reversal. MACD is dark green and switching to light green. So it's peaking and starting to come down, right? And so when it comes down, just like a roller coaster ride, we fly down, right? So dark green to light green, RSI is extremely overextended. And then number 3, overextended past the resistance line. Number 4, entry was breaking pre-market low support. So the moment that we broke that pre-market low support, we entered in our puts. This was on the 3-hour chart on TQQQ. Puts went for 2,000% over the course of 2 days. It was a 3-hour chart. So we were expecting to be in this play anywhere from a whole day to maybe 2 days, right? And so rode the winners out to the next day, and we just continue down. RSI was still coming down. We knew we were still going to be in this play. MACD was still going down. There was no reason to get out of this play. When we chase with our stop losses, of course, they're under support. But when something has this much momentum, those supports are just going to be like flying, right? You're not going to get stopped out. We're just coming down hard. And so, which we did for 2 days, puts went for 2,000%. That's a 21x ROI. If you're using a $100 position size, 2,000% gains is basically $100 to 2.1K, right? $2,100. If you're using $1,000, that's $1,000 to $21,000, right? And so from there, you just keep compounding. You go from 3 figures to 4 figures to 5 figures to 6 figures, and you just take plays over and over and over again. That's how you compound. And so whenever we get perfect opportunities like this, we take them, jump on them, and from there we go. So didn't explain Fibonacci's. Gonna come out with a whole video based on Fibonacci's soon, and more so videos about trend lines, more videos about chart patterns, examples of what I see when and what I use. But hopefully this gave you guys a good opportunity to kind of look into my trading plan and see everything that I do and why I do it and how I do it. If you guys have any questions, feel free to DM me on my Twitter. The link is down below. We'll get to your guys' questions as soon as I can ask. And the Calendly link is down below as well. If you want to hop on a Zoom call, we can hop on a Zoom call, go over any questions that you guys may have and anything that you guys would like to go over. If you guys liked the video, please like, comment, subscribe. I really appreciate the support on here. And I will catch you guys in the next video.